Hello traders, you are welcome back to the Forex Geek channel. In this channel, we explore effective strategies that can help you elevate your trading skills. And in this particular video, we are going to be diving into one of the most fascinating aspects of Elliott Wave Theory. All right, specifically, we will be discussing the Diagonal Elliott Wave. Right, trust me, understanding this pattern can be a game changer for your trading analysis. Alright, but before we begin, don't forget to smash that like button and hit the subscribe. Turn on the notification bell so you never miss our deep dives into advanced trading techniques. Alright, let us get started. The Diagonal Elliott Wave is a unique wave formation that appears in trending markets. Right, it's part of Elliott Wave Theory, a framework that categorizes market movement into impulsive and corrective waves. Right, now diagonal waves fall into the impulsive category, but with a twist. They don't follow the typical wave structure. Right, now there are two types of diagonals you need to know: the leading diagonals and ending diagonals. Each has its own characteristics, and understanding their differences is key to mastering this pattern. Okay, now let us talk about leading diagonals first. The leading diagonals appear at the start of a trend, right? For example, in this particular sell trend, this is the start of the sell trend, right? Because we had a buy trend just right before that. And after this breakout, we can see that this particular sell trend started. So the leading diagonals, they appear at the start of a trend, typically in wave 1, because this is wave 1, right? Wave 1, wave 2, wave 3, wave 4, wave 5, right? So leading diagonals have a wedge-like structure with overlapping price movements. Okay, they have a, now how does a wedge look like, right? How does a wedge look like? Let me remove this. Remember that a wedge is a pattern that is not exactly like a triangle, but it has converging lines, right? It has converging lines. If the lines should continue, they are eventually going to meet at a point to form a triangle, but they don't exactly get very close to each other when on the candlesticks, right? So they are called a wedge. Okay, so in this situation, we can see that we had two converging triangles, converging trend lines, I mean, two converging trend lines, but they are falling, two falling converging trend lines, right? They did not exactly get very close to each other. So this is a falling wedge, right? A falling wedge pattern. Okay, so here's a crucial tip when you want to identify leading diagonals. Look for 5 waves that are subdivided into smaller waves. Okay, this can be either 5-3-5-3-5 or 3-3-3-3-3. Okay, this structure sets the stage for the market's future direction. For example, we can see that we have our 5 waves pattern here: the first wave, the second wave, the third wave, right, the fourth wave, and the fifth wave. Okay, but within the first wave, if you look closely, within the first wave, we had uh another wave pattern. We had, you can see, 1, 2, let's just call this 3, right? This 3 and this 4, right? And then 5. So within the first wave, you can see that we had another wave pattern within wave 1. All right. So in this case, we can call that a leading diagonal pattern. Okay. Now let us move to ending diagonals. These occur at the end of the trend. Okay. So let's see if we can find an ending diagonal. Okay. They usually occur in wave 5 of an impulse wave or wave C of a corrective wave, right? Unlike leading diagonals, ending diagonals signal a potential reversal or pause in the market. So if we are unable to find such, we should just know that, let's see, 1, 2, okay, this is not exactly that. 1, 2, 3. This is not it. Okay, I'm having a challenge finding an ending diagonal, but just note that an ending diagonal has a similar structure. Okay, a similar structure to a leading diagonal, but in this case, it occurs at the end of the wave, usually in wave 5, right? So you still have your wedge shape with overlapping waves, but the key difference is that ending diagonals are typically found in mature trends and often precede sharp reversals. Okay, so this makes them a valuable tool for identifying when a trend is losing steam. Okay, now how do you spot these patterns on your chart? The first thing you should do is to identify the trend. Okay, the trend direction is important. Are we at the beginning or the end of a movement? Right? Then secondly, look for overlapping price action. Like in this case, we can see that we were just at the beginning of a sell trend because a buy trend just ended, right? This is the daily time frame. Okay, this is the daily time frame. So if you look closely, you will see that this buy trend began in 2020 and ended in 2021. So it was about a year long. Okay, we can see that it was around November 2020 and ended January. Okay, that's about 2 months long trend, right? Not a year long because it started November 2020, ended January 2021. So it's about 2 months long buy trend. So it was actually a buy trend that ended, and then the sell trend began January 2021 and ended around March, right? So about 2 months long sell trend again, right? So we can see that that was the end of a buy trend and a sell trend began, right? Then after we have identified direction of the trend, we have to look for overlapping price action with a wedge-like structure, right? And remember that we found something like that. We found something like that in this wave 1, right? Remember, we had our wedge-like structure, right? We had our wedge-like structure here, right? Okay, and then you can see that we had an overlapping price action, right? We had just within this first wave, you can see a couple of different price action within this first wave. We have a resistance around here, right? We have a resistance zone around here. Okay, and this whole action was just one wave, right? Because this was the second wave that formed the second main high, right? Remember that a bearish structure is formed by lower highs and lower lows. So this was the second main high of this bearish structure. Then this was like the first main high, and then the first main low, and then the second main high, the second main low, the third main high, the third main low that ended the sell trend. Okay, then you have to confirm the wave count. 5 waves for a complete diagonal, like what we had here. 1, 2, 3, 4, 5. 5 waves for a complete diagonal. Then you can also decide to use technical indicators like RSI or MACD to check for divergence, right? If you want to also employ divergence, you can decide to check, for divergence. The reason is that, when a divergence signals, it shows that there is potential reversal about to happen. For example, let's just add the RSI to see if we're going to find any divergence around there. Now, it doesn't mean that divergence is always going to occur, right? But divergence could actually occur, right? For example, here we can see that we did not exactly have a divergence, but you can just check out your RSI or MACD in case if there's going to be a divergence, right? And then you can once you have spotted the diagonal wave, you'll have a clearer idea of what to expect next in the market, okay, whether it's a continuation or a reversal, right? Now, as you can see from this example, make sure you pay attention to the wedge. When you want to spot a diagonal Elliott wave, make sure you pay attention to the wedge, right? The wedge pattern within a wave, within the first wave is for your leading diagonal, or the last wave for an ending diagonal, okay? Now, why should you care about diagonal waves? Because they give you foresight. Spotting a leading diagonal can prepare you for a new trend, while identifying an ending diagonal can save you from staying in a position too long, okay? And that is it, traders. That's the Diagonal Elliott Wave explained. By mastering this pattern, you can make more informed decisions and refine your market entries and exits. If you found this video helpful, give it a big thumbs up. Don't forget to subscribe for more content like this. Let me know in the comments if there is another topic you'd like us to cover. And as always, trade smart and stay disciplined. I wish you a happy trading. See you in the next video.